Hello everyone, welcome back to RoyalT Empire Education. And for those who don't know me, my name is Tyrone. In our last video, we talked about the head and shoulder uptrend and downtrend. And if you have not seen that yet, you can go check it out in our YouTube channel. While it is important to know all these patterns for your portfolio, it is also important to know the financials of a company. So today I'm going to talk about 3 basic statements of a company and how it is beneficial to know these statements. What are the 3 basic statements of a company? When you look at the company's financials, you will see these 3 things. We have the balance sheet, income statement, and cash flow statement. All these statements combined together can tell you the book value of a company. Book value means the current value of a company that is calculated by its assets and liabilities. Assets are things that benefits the company, and the liabilities are things that drains the company in order to keep it moving. I will explain these 3 statements and we'll go deeper in each one of them in our future video, so stay tuned. The first statement is the balance sheet statement. This statement can be seen in 10K or 10Q. 10K is the annual statement and 10Q is the quarterly statement. This sheet tells you about the assets, liabilities, and shareholders' equity. In order to see its profit, you will have to add the liabilities and shareholders' equity, which would equal the assets. There are 5 sections in the balance sheet statement. You have the current assets, which is the short term, non-current assets, which is the long term. It also has the current liabilities and non-current liabilities. Lastly, it has the equity of a company. The next statement is the income statement of a company. This statement shows us the financial health of a business. It shows us the earnings and expenses, gross profit, operating income, and income before and after taxes of the company. These factors will show you whether the company is making profit or loss in a period of time. The last statement is the cash flow statement. This statement is about movement of the cash in and out of the company. That is called the liquidity and solvency. It also includes the cash from operations, cash from investing activities, and cash from financing activities. All these 3 statements are what makes the company's value visible. We trust these companies to be honest with their numbers. So as an investor, we would know where to put our money in. This doesn't mean that all companies are honest. Some are not. And they put wrong numbers in their financial statements so they can make their company look good. When you know the true value of a company, it is easier to see if the price in the stock market is overpriced or discounted. Now that we covered the 3 basic statements in the financials of a company, we will talk about the benefits of knowing these statements. What is the benefits of knowing these statements? The obvious benefit that anyone can see is that with the 3 statements that you have, you can value the company. This eliminates the question of is this company cheap or not. With this out of your head, you can fill it with more investment opportunities. Another benefit is with these statements, you can compare the performance of a company that are in the same sector. It's not about how many companies that you are invested in, but how good is the company that you are invested in. It is better to have few stocks of a great company rather than have a bunch of stocks in different companies that are average. Find the best company that is suitable for your portfolio and focus on it. With these benefits, knowing the basic statements of a financial can help you become a better trader. So today we talked about the 3 basic statements of the financials of a company and how it is beneficial for you to know these statements. Financial statements are the true key to the business to unlock their true self. There are some that has great potentials and some that don't. With the tool that I just gave you, think about companies that are good to invest in because of their financials, so you can become a better trader. Subscribe and like if you like what we're doing, and comment down below if you have any questions, and I will gladly answer them for you.